Welcome to this explainer. I'm so glad you're here, because today we're diving deep into something every trader struggles with, mastering your entry and exit strategies. We're going to completely demystify the mechanics of this, literally replacing all that stressful guesswork with confirmed high probability setups. So if you want to stop taking those pointless losses and actually start executing like a pro, well, you're in exactly the right place. Let's get right into it. Look, we've all been there, right? You see the price moving, you start feeling that FOMO kick in, so you smash the buy button, and then, boom, the market just instantly reverses on you. It knifes straight through your level and hits your stop loss before you even have a chance to blink. It's so frustrating. That sudden pain of watching an unconfirmed setup just dissolve right in front of your eyes, yeah, it's the worst. But hey, today we fix that. Here's our playbook for the day. First, the fake out trap. 2. The power of closures. 3. Pro entry models. 4. Catching the momentum shift. And finally, smart exits and targets. Alright, kicking things off with section 1, the fake out trap, and exactly why trades fail early. So the real trap here is buying into unconfirmed price action. Think about it. When you jump into a trade while a candlestick is still open and forming, when it's just moving up and down wildly, you're actually buying into a potential rejection. It hasn't locked in yet. If the market suddenly pulls back before that specific time frame ends, you've essentially bought the very top of a rejected move. And doing that just completely tanks your probability of winning. So, how do we actually protect ourselves from this? Well, that brings us to section 2, the power of closures, which is really the ultimate market truth. The foundational mechanic that fixes this whole fake out issue is the candlestick closure. Basically, the closure is the final locked-in price at the precise moment a time frame, like say the 1 hour or the 5-minute chart ends and a brand new candle opens. And here's the thing, until a candle actually closes, it can completely reverse on itself. It can look incredibly bullish 1 minute and then turn into a devastating bearish drop the very next. So the closure, that is the ultimate undeniable sign of what the market is actually doing. To visualize this, think of wicks as attempted price action. They're kind of like little scouting parties sent out by the market to test a high or a low, but they ultimately got rejected and pushed back. Wicks just show us a failure to hold a level. But the thick, solid bodies of the candles, now that is confirmed price action. That's captured territory. And as traders, we only want to base our setups on the territory the market has actually conquered, not just scouted. Alright, now that we've got that down, let's build out the playbook. Moving to section 3, pro entry models. These are the expert strategies for execution. Let's compare your actual options for getting into a trade. First up, the limit order model. It's aggressive, giving you the highest risk to reward, but it's got the lowest win rate, sitting around 30 to 40%. Then you've got the strong price action model. This one's more conservative. You're waiting for buyers to show up, and it hovers around a 50% win rate. And finally, the confirmation model. This is the most conservative approach, but it boasts a massive 60 to 70% win rate. Let's look at exactly when to use these. Let's start with that aggressive limit order. Now, a limit order guarantees you get filled on the bid at your exact key level, no matter what. But because it doesn't wait for a closure, it is highly prone to fake outs. You really only want to deploy this weapon under very strict conditions, like when you have a crystal clear higher time frame setup, or during an A+ news condition, or when the market is making an elevator style drop, when it's crashing fast and giving you one immediate retest before dropping even further. Now contrast that with my absolute favorite approach, the confirmation model. Here, you're literally just waiting for a bullish candle's body to close entirely above the previous candle's body. It's the safest model, hands down. Why? Because you're relying on 100% confirmed closed data. This model puts you in the trade for the absolute shortest amount of time, because momentum is already confirmed to be moving in your direction. It gives you the highest win rate, and it rarely suffers from fake outs. Seriously, it's a total game changer. But knowing your trigger is only half the battle, right? That brings us to section 4, catching the momentum shift, and timing your entry right. Okay, here's the golden rule for using multiple time frames. Step 1, you find your primary setup, like your supplier demand zone, on a higher time frame, like the 1 hour chart. Step 2, drop down to a 15-minute or 5-minute chart to look for your refined entry during a retracement. And step 3, you wait for your closure. But listen closely to this part. Always trust the higher time frame where the setup was initially sound. If a 5-minute candle fakes out, but the 1 hour candle still holds the zone, trust the 1 hour. The setup promise time frame is absolutely king. While you're hanging out on those lower time frames, you need to watch for the momentum shifting. How do you actually know the sellers are dying out? Well, it's kind of like watching a car run out of gas. You'll literally see the candlesticks getting smaller and smaller as they approach a key support, or you'll see multiple long wicks rejecting that level. In fact, if you see 3 long wicks in a row at support, that is a massive red flag for sellers. It tells you the market tried to push lower, failed 3 times, and a prime momentum shift for buyers is right around the corner, which is usually followed by a sudden large green candle breaking structure. Alright, so we know how to get in confidently, but now for the grand finale. Section 5. Smart exits and targets. Locking in your profits. Getting into the market is one thing, but getting out with profit is what actually makes you a trader. So you have to define your exit plan before you ever enter a trade. Your stop loss should be placed immediately beneath the most recent confirmed swing low. Why there? Because putting it there ensures you only get stopped out if your entire trade thesis is genuinely, mathematically proven wrong by the market-breaking structure. For targets, we're looking at the high of the day or previous supply zones, and the golden rule here: do not execute the trade if the math doesn't make sense. And what exactly is that math? 1 to 3. That is your ideal risk-to-reward ratio. I literally cannot emphasize this enough. You want to risk $1 to make $3. If you take a trade with a confirmation model and a 1 to 3 risk-to-reward ratio, that right there is the mathematical secret to surviving and thriving. Even if you only have a 50% win rate, it protects your capital while exponentially growing your wins. But look, none of this math and none of these fancy entries work if you don't have patience. As the source material reminds us, the market will never go down or up in a straight line. It moves in a push phase, then exhaustion, then another push phase. Patience is non-negotiable here, folks. Never enter when the price is just pushing wildly out into the middle of nowhere. You've got to wait for that methodical, controlled retest of your level. So I'll leave you with this final thought. You now possess the playbook for entry and exit strategies. You understand the fake out trap, the incredible power of the closure, the confirmation entry, and that crucial 1 to 3 exit math. But knowing this stuff isn't the same as executing it. Discipline is easy. Discipline is hard. When you sit down for your very next chart session and that price starts moving fast, will your discipline actually allow you to wait for the candle to close? Think about it. Thanks so much for joining me on this explainer, and I absolutely can't wait to see you apply this in the markets. Catch you next time. This image is for illustrative purposes only. To gain a deeper and more structured understanding, join my community, where you will have access to comprehensive materials and detailed guidance.